I'm on the trading floor of the New York Stock Exchange with Peter Cardillo, Chief Market Economist for Rockwell Global Capital. Peter, thanks for being with us again.
Good to be back.
We've seen some great jobs numbers today that have been above expectations. What does this mean for us all?
Well, it just means that the economy is improving, and it points to the fact that the economy is moving on all cylinders, which is good news. And, if you dissect the employment data today, we saw manufacturing jobs growth. We saw construction hiring move on the upside. We saw healthcare adding new employees. And I think the biggest kicker of the report today is the fact that we saw the participation rate actually move up. And that's good news, because that means that, not only are we adding quality jobs now, but we're seeing more people not leaving the job market. And so that's really good news. And, the fact that we have unemployment rate dropped to 7%, that's a little bit questionable. It could be a technical maneuver by the Commerce Department, but nevertheless, the bottom line is that the job market is certainly heating up again, and that we're probably going to see hiring average close to 250,000 new jobs per month next year. So that takes us to the question of what will the Fed do? I think we're very close for them in making an announcement. I still believe that we'll get some announcement in December. Whether it happens in December or January, it's irrelevant at this point, but certainly we're very close. And so we're seeing the market respond to the numbers.
How are we doing with consumer spending?
Consumer spending, personal spending was up 0.3%, although personal income was actually on the negative side. But I don't think that's going to be a trend. It could just mean, obviously it means that people have been spending a little bit more than what they've been making. But, that's not been the trend for the year. So consumer spending bodes well for the economy. Bottom line is we should see stronger growth emerge over the next over the coming months, and that's also good for the stock market, because that means that corporate earnings should continue to stay at levels that will not inflate valuations.
Thank you very much for your time.
My pleasure.